Hello once again to all my brothers and sisters in the business. This is Broker's Playbook with another fire episode. Coming up, I will be introducing to the Broker's Playbook community Mr. Don Scott, founder and CEO of Frank Mortgage. Frank Mortgage is a fintech mortgage platform newly launched to market, looking to do one thing and one thing only: bring transparency and choice direct to each of our clients. There's incredible ways to work with him, bringing this type of technology to the market where it really democratizes that whole market segment. I'm excited for you to find out more and how this new fintech can bring change to our really archaic system and old way of doing business. Mr. Don Scott, welcome to Broker's Playbook, my friend. I'm very excited to have this conversation today.
Thank you, Simeon. I appreciate the invitation to be here.
We set this up quickly after meeting for the first time a few weeks ago. We were introduced by a mutual friend, and this mutual friend is actually somebody that has taken almost a mentorship role in my life, a very respected legend in the business, Bay Street background, and now the development business. I'm referring to actually Mr. Salapudis, he's the president, or he is?
Yeah, I think so.
He's the president of Graybrook Securities. Yep. I'm actually referring to Mr. Chris Salapudis, who is the president at Graybrook, and he thought it was good for us to meet because of some of the things that we're doing and what your platform is doing. And once we met, sure enough, there is a whole lot of opportunity for us to work together in bringing some serious and significant change.
Yes.
In the way we do business. Today, I want to focus on what your platform is doing. I have lots of time to explain all the things that Broker's Playbook is doing. But today, I want to make this about you and Frank, because I was excited by it. Tell me a little bit about, let's start with you and your background, because I think all of this has to do with how we got here to what Frank Mortgage is. Tell me a little bit about your beginnings and your path in life and in business.
Sure. I go back in the mortgage market over 30 years. I started in 1991 at First Line Trust, which was an innovator in the market at the time in both the broker space for origination, but also in securitization for funding. And that's the path I took for most of my career. I followed the funding path. So I worked at CIBC and Deutsche Bank and Maple Bank, different financial institutions that funded mortgage lenders. So built a couple businesses, one at Deutsche, one at Maple, from scratch that funded a lot of the medium and smaller size lenders in the marketplace, giving them access to capital markets, giving them access to warehouse lines, giving them access to, funding that they couldn't otherwise find. And so I've been very close with these lenders, loved their business, loved the people. And when I left the last bank I was at, wanted to stay involved and engaged in the mortgage market. Really have a love for the market, and decided to flip around to the other side of the market, the consumer-facing front end. And the way to do that is using technology to try to find a way to alleviate a lot of the pain points that you see customers report that they have when you see customer surveys.
And there is many.
Oh, many. Yeah. And they're common, and they've been common for 30 years. And that's one of the sort of things that sort of, I don't want to say frustrates me, but that I've noted all the time through my career, is that there are these issues that constantly keep popping up on the origination side of the market. And I never really saw anybody really making a concerted effort to try to do something about it. Here and there, they make little changes, but it's often difficult for customers to figure out what to do to get a mortgage. They find it, the market's opaque. It's hard to get access to information. When they report back through surveys like CMHC or rates.ca or whoever it is, they say it's cumbersome, it's confusing. They exit the process with a mortgage, but they're not quite sure they got the best deal they could have got. And it just doesn't need to be that way. And so now with the advent of fintech, this online system that you can create for any kind of consumer, but for a mortgage consumer, you can present information to them in new ways and make it easier for them to find what they need to know to understand what they're getting into when they get into the mortgage process, as well as create a way to be just more open and transparent about what their options are. Because the market today, the traditional old process still exists in the fintech models. There's two basic models. One is we're a traditional broker and we've now got an online front end. So somebody can come on and apply online, but then they're kicked into a traditional process with a mortgage broker. And that introduces the biases that exist in the marketplace. It's not really anyone's fault. I'm not saying brokers are doing anything wrong, but lenders pay the brokers. Brokers are supposed to represent the customer.
Well, the truth of the matter is that there's a myriad of broker houses, call it Monster Mortgage, Dominion Lending.
Yeah.
There's a million different broker houses.
Yep.
And everybody has their relationships, 10, 50, 100 relationships. Yep. And although it's more choice than walking into any of the big 7, because when you walk into the big green machine, yep, you're going to get the green rates. You walk into the red one, you get the red rates.
That's right.
So working with a broker, you're going to get 20, 30, 40 options, 50 options, but out of the 50, my understanding, 95% of those are going to end up wherever the compensation or the incentives drive the broker to make the decision.
Unfortunately, that's the case. Yes. And that's one of those biases that is an unfortunate outcome. It's not something that people sort of try to manipulate a customer. It's just the incentives make it so that brokers sometimes will steer a transaction to an outcome that's really great for them. And it may or may not be always the best outcome for the customer. And then you've got the other fintech model where they front themselves as a broker, but they actually own a lender. And their bias is to steer that customer to their own lender. So again, there's a bias introduced there where they may not show you other offers because they want you to go to that lender that they own. So we think that there's a way through a fintech model to create a completely agnostic process for a customer where they can go online, get access to the information they need to help them get up the curve and understand how much they can afford and what the process is like, and then see sort of almost like an Expedia type of output when you're looking for a hotel in Cancun. You can see all these options that are available to you without the broker sort of now having inserted themselves in that information flow with their bias that, well, maybe you should go to this lender because that's my best relationship. That's not how we operate. We don't insert ourselves in that product selection, except to the extent that we're giving them advice on what they're seeing.
That's right.
So they can see that there's maybe a small credit union that has a really terrific rate, but what are the product features? They can see that all those big lenders have maybe different rates, and why are they different, and what are the difference in the product features? So we advise them. We're still a broker, so we have licensed agents that help the customers through the process, but they get to see it, and they can see what's available.
You're peeling back the curtain and allowing them to make a choice, or at least inquire about what the benefits, the pros and cons of any lender or any term sheet.
Right.
So they get the consumer does get access to professional advice from licensed brokers.
Yep.
So it's not like a just AI, no human. There is full service.
Exactly.
But the consumer gets to see the back of the house.
That's right. It's still a very big financial commitment and decision, and most people want to talk to somebody who's an expert in the field. So we provide that still. We provide the customer service level, but we don't interfere in the delivery of information to them. And we, in a sense, reduce the influence of the broker. Even though we're still there helping, we're reducing our influence in the decision and putting the power that we've now taken from the broker and giving it to the consumer. A little more autonomy, a little more control over your own process, and a little more visibility to what's available to you, so you have the choice and the ability to make the decision without worrying about somebody else's bias steering you wrong. So it's a completely different model. And we don't see many of the fintechs embracing that idea. They still want to embrace one of those two I described, sort of the traditional broker model or the lender backing them model. And we're going to stay away from both of those biases and be purely agnostic and just customer first 100% of the time.
That's amazing. And the actual compensation to the broker working it, both the mortgage broker and whoever else for sourcing is still paid for by the institution that's going to do the deal.
That's right.
So the consumer never has to pay for anything. It's still compensated by the institution that's going to fund it.
That's right. So our compensation model is the broker revenue from the lender. In the prime A space, that's the model for every broker.
Yes.
In the B institutional space, not private, but the B and alt space, a lot of the brokers charge fees for that. We don't. So for a user that comes onto our system that uses us to find an institutional lender, be it an A lender like one of the banks or a First National, or a B lender like a MCAN or a Home Trust, no fees paid to the broker. So we're fee neutral that way for the customer. We're free to use. And we take the fees from the lender, and often we'll discount the fee to give that customer a better deal. Because one of the things I think that's nice about technology, or that should be, anybody that's putting out a tech platform should be thinking about cost. And one of the efficiencies that can be driven from technology is a cost efficiency. We can bring down the cost. There's a lender proposition here to bring down the cost for our lender partners by reducing the overhead for them to review a file if we properly digitally scrub it and deliver a complete file 100% of the time. So that's an objective. But with the customer as well, because a lot of this is automated, we can bring the cost of the whole process down and deliver some savings to them with a lower rate by, using our fees to some extent to buy down those rates. So there's not just efficiency and transparency benefits, but there can be rate and cost benefits for the customers as well.
From a biz development side, one of the biggest values that I have received in my career and continue to receive from many of my mortgage partners, I have at least a half a dozen of people that I've worked with for a decade, is the fact that I can rely on their expert advice for my clients.
Yes.
That trust factor. Do you have a team of brokers that you would say are able to take the capacity on of, I have a book of business of 10,000 investors. I'm at a stage of my career at 17 years in where things are busy and things are good. Is your team of brokers able to hold the hand of my agents, for example? I have a team of agents. I have 55 agents on my team. Mm-hmm. If I were to introduce you as a service, how are you going to work with my brokers, or with any of the brokers in Canada, for that matter, that are watching right now, to make sure that their clients are a priority, that they're getting the guidance and support that they need? Because that's a huge component.
It is.
Huge component. Trust between broker and broker, mortgage broker, real estate broker. Talking about the person that's in our world needs expert help. Mm-hmm. The investor community specifically, I know that I put my clients through 3, 4, 5 deals every 3 to 4 years. The structures matter. Yeah. Are you investor friendly? Are you like, how does your team handle all that?
We are investor friendly. And so, our agents can handle A lending, primary residence rental, B lending, private lending as well. And what we do with our partners is provide a sort of a new level of information and involvement in the mortgage process, if you will. So for a realtor in particular, we now have a pilot dashboard that we've developed for
brokers.
For brokers, yeah. So they can track their customers' activity on our platform. So they can log in to a secure portal. They'll only see their customers, and they can see what stage of the process they're at and what's the most recent thing that's happened. Did they get the pre-approval letter? Did they get the commitment letter?
Have they put out all their paperwork?
Yeah.
That's incredible.
Are we waiting for a signature for somebody, for instance? So the realtor can stay involved, as opposed to that old traditional way where you might send someone off to see someone at the bank or someone at a broker, and the customer might disappear for a few days. In our ecosystem, you're involved right away. We have the conversation with the customer. We put it in the notes. You log in, you see the customer, you see what the conversation was. So you can track your customer's mortgage journey in a much more proactive way.
And efficient.
Through this, and efficient, yeah.
You don't have to call a million people, what's going on over here, what's going on over there. You don't have to wonder, did they do the application? Of course they did the application, because you can see it in your dashboard, or
yes, exactly.
They haven't follow up.
Yeah. And because we deal with the banks, and we deal with the large monolines, and we deal with the small monolines, and the credit unions, and the private lenders, and the B lenders, the odds of finding a yes somewhere for your customer are very high, as opposed to, say, sending them off to one of the big banks who say no a lot. So, we deal with a wide variety of lenders, and we have expertise in our agent base to handle the variety of products: rental, primary residence, B mortgages, et cetera.
That's amazing, and thank you for clarifying that. I actually didn't know that last component when I was asking the question. I'm glad I did, because that's huge.
I think so, yeah.
That's huge. Actually, a good friend, Reuven, who was on the show a few months ago, did the same thing for the legal process.
Yeah.
I would love to see sometime in the future some kind of a collaboration where we tie the entire transaction, where we have that. We're building that for real estate.
Yep.
In an agnostic way, meaning not brand preferred, etc., but client focused. Imagine being able to bring Deeded, for example, which is Reuven's platform.
I've spoken to Reuven.
Frank, you have?
Yeah.
That's incredible.
Yeah.
He's incredible.
Yeah, he's a great
I love that guy. And he's doing big things, and he's always done big things.
Yeah.
He's a visionary guy. I would love to see that collaboration.
Yeah.
We're going to tag Reuven in this episode.
Yeah, because one of the things that sort of is behind our philosophy here is we don't think people roll out of bed in the morning and say, I want to get a mortgage. They roll out of bed and say, I think it's time for me to go see if I can buy a house. That's what they're after. They're not after a mortgage. A mortgage is just a necessary piece of the process, but it's not the end outcome that they're looking for. So Reuven's model, our model, they can stitch together very well and create this front to back seamless process that just simplifies everybody's life and takes the focus of their time off of the mortgage, because it's a more open, transparent, easier process, and lets them put the focus where it belongs, which is on buying that house. That's the
but it streamlines the professionals involved.
Yep.
Which is, for us, that's huge. Knowing that I don't have to follow up. Did the legals get it? Did he forward this and he forward that? If you can go inside a platform, inside an app, and be able to upload the documents, the APS goes straight from DocuSign into the platform.
Yeah.
Imagine the time saved, the hours saved. It doesn't necessarily have to be you, whether it's you or your assistant, somebody's getting paid to upload. Yeah. Imagine everything is streamlined and you can see where your client's at. You can call your client and say, I see everything is wrapped up. Congrats. I'll meet you at the movie theater. Bring your family. You guys are going to a movie tonight. As opposed to stressing, where is my closing? Where is my mortgage? Did it fund? Yes, it funded.
Yeah.
Take a look at the platform.
That's right.
It's done.
It's right there for you.
I absolutely love that.
And very customer friendly too. Fast forward a little bit, and when everything's tied together, so you get a realtor piece of technology attached to our mortgage technology, attached to, say, the legal technology. They only have to enter their information once. Right now, they have to do it every time. You just do it once, and it all just gets transported and follows them along the whole journey. So it's just a much easier way to go about doing business.
That's incredible. I'm going to take the focus off Frank for a second, and I want to dig a little bit into your insight.
Okay.
I mean, you're in the mortgage business, and we're living in a time and a place where every dynamic that we've known is being meddled with, to use nice language. Mm-hmm. I have lots of languages that I could use for what's been happening the last 2 years.
Yeah.
12 increases or 11 increases at this point.
Yeah.
Immigration will not stop, and they've increased it. Housing shortage is at actual crisis levels, with a report yesterday saying that we might get up to 500,000 homes short in the next 2 years.
Yeah.
So it's actually impossible to fix.
Yeah.
There is no housing policy to address this.
Nothing coherent. No.
Inflation and economy are the other dynamic. So we increase mortgages in a market where people can't even get to a home, trying to bring inflation down. Inflation's coming down. What in the hell are we supposed to think for the next 3 months? We're going into Q3 at this point for 2023. How do we navigate this market to make the best decisions for our clients? And this is your insight. Let's call it this both your personal or professional opinion, choose. But you've been in this world for 30 years. You're a very intelligent man. What's your take on what's happening? How do we guide our clients best right now, according to Don Scott?
Yeah, and that is a challenging question.
It's a loaded one.
There's a couple fundamental principles that I think sort of underlie how we want to talk to clients. And, unfortunately, I am old enough to remember a time like this happening before. I moved to Toronto. I'm originally from Nova Scotia, but I moved to Toronto in 1989, just when the crash happened.
You got into business in 91 as it was happening.
My timing is always so perfect. Welcome to Toronto. And then I launched Frank Mortgage when rates start rising, right? My timing is always good. Yeah. So I saw that happen. I saw the downturn, and I saw how long it took to recover from it. And then I saw the interest rate spike in 1994 when I was sitting on the bond trading desk at CIBC. And we saw Central Guarantee Trust go under and Standard Trust go under and those sorts of things, kind of like Silicon Valley Bank just did. These things do happen. But we hadn't seen it for a long time. We lived in an abnormal period. The last 10 years have been, do whatever the central banks tell you to do kind of market. And rates were held, I would say, artificially low. That goose demand, it created a lot of appetite. It created a lot of risk taking. And I'm an old risk manager because I used to sit on mortgage books and I was responsible for managing the risk. And it always, like one example that really I struggled with was the preponderance of variable rate mortgages, say in 2010, 2011, or not when I say 2020 and 2021. And that was when you could get a fixed rate mortgage at say 179 or even 159.
I am the recipient of 3 of them.
Yeah. See, so those look like pretty brilliant decisions right now. And I think the industry should have done a better job of promoting that to their customers, that these fixed rates are unprecedented. These are lower than you're ever going to see again. And you should lock that in because these variable rate mortgages do have risk. So I think we lost our attachment to risk management.
I think it was a time of greed. And people thought like there was the negative rate conversations at that time.
Yeah.
So I had all 3 of my mortgages by coincidence term up at that time. Because one was a 2-year, one was a 5-year, and the other one was a 2 or 3-year again.
Yeah.
But they all happened. So I get my mortgage broker calls me. I deal with a mortgage broker. Calls me up. Simeon, your condo in Bayview is up. Your primary res is up in February. This is November 2021 to February 2022. I'm not acting like I knew anything. Yeah. This was pure luck. Pure luck. Nothing more, nothing less.
Timing's everything.
Timing's everything. She calls me up. Stephanie, hi. I can get you a variable at 139. I can get you a fixed at 191. I look at my wife. What are we talking about right here? Fix it.
Yeah.
Term, 5 years. Fix it. How much lower can I go?
Yeah.
How much am I leaving on the table? $40 a month? It's okay.
Yeah.
I can sleep at night.
Yeah.
Next one was mid-January. I get you a 5-year fix for 2.02. Fix it. Mm-hmm. 2 weeks later, last one that were for my terms at that point, 2.15. Fix it. Yeah. Next month, I would have been $5,000 a month backwards.
Yeah.
So again, not that I didn't do it because of my superb IQ. I did it because I couldn't possibly fathom a better fixed rate ever in my life. So I took it. I had so many conversations with consumers, with our clients, riding the wave.
Yeah. As those rates were increasing last year, we had customers calling in saying they wanted to take a variable. And I don't think it's our job to give interest rate advice. There's a lot of mortgage brokers out there that do, and I think it's kind of dangerous. And those that gave the advice to people to say you should take a variable when variable rates were that low, to be totally frank, that was reckless.
To be total, no pun intended.
Now you know our catchphrase. And, that was reckless advice because it didn't factor in the risk here. You should only take a variable rate exposure if you can afford to be wrong. And so we need to talk to our customers about here's a variable, here's the rate, here's the risk involved, here's a fixed, here's the rates, here's the risk involved, say a 2-year, 3-year, or 5-year. And give them the information they need to help them make their own decision, help them gauge their own risk tolerance. But we shouldn't be pushing them towards taking any particular kind of risk, especially, I just always find it funny to embed interest rate risk in your home. Maybe in an investment properties, it may make a little more sense. Even then, I would have wanted to fix back then. But to put interest rate risk into your home, into the shelter, the place you're going to raise a family, isn't always the best financial decision. And so what happens when we have that extended period of central bank intervention with low rates is we lost sight of risk management. And so people took unnecessary risks. And there's a lot of people who wish they made the decision that you made on your mortgages right now, and they're paying the price.
I'm very happy I did that. It's actually one of the biggest and best moves I've ever made, not knowing how things would go, because I didn't expect things to turn the way they did. Yeah. I did not. I knew we were due for a reckoning. It's just not how I saw that going down. I'm pretty in tune with fiscal policy. I follow it. I like it. Yeah. So I follow it because I like it. But there was the mistakes that happened during that time, the amount of time that they allowed these rates to exist, and then the way the aggression of the Canadian Central Bank to try to undo the damage. It stunk from the beginning, for Macklin announcing that rates aren't going up anytime soon and pumping that pseudo confidence to the consumer directly. You can't go to the consumer directly and say everything is kosher. What are you doing?
Well, I'm going to keep rates low for a long period of time, encourage everybody to go out and leverage up and then pull the rug on them. It was horrible. There's not a lot of kind words you can have for that.
There is not, and I've covered this to death, so I'm not going to do it again, but this is the time, in my opinion, as professional real estate agents, brokers, mortgage brokers, because I say brothers and sisters to all of our broker community because that's what we are. Mm-hmm. This is the time where the consumer has never needed us more. There's a lot of information out there, but it's fragmented to heck. And somebody needs to stitch the story together properly. So as a professional, again, not to give interest advice, it is your job to point them to the right sources of data to make a decision that's right for them. Yeah. And that is going to be the game changer. And so Broker's Playbook, as I mentioned earlier, we're bringing in artificial intelligence to pull all data of actual transactions in the country and in North America, for that matter, to be able to automatically fill in pro formas on how something can perform now and based on historic, where it's going. Yep. Is it an upwards trajectory? Is this area filling in or is it filling out? And these are the decisions, and combine that with Frank, for example. Mm-hmm. This is why we were talking right before the show. It could be something very special to tie in the real estate opportunity proper with mortgage proper. Yeah. Take away the biases. Take away the ability to look at the nonsense and take the real meat and potatoes to say, if I put this layer of finance on this property here, this is what I actually get. This is how this investment will be performing.
Yes.
It's super powerful.
Absolutely. It's a union of the two key relationships in the home ownership journey that is necessary, I believe, and is the future.
And bringing absolute transparency in it. Yep. Because that's the key here. So as brokers, we are relevant to the transaction because we have fiduciary duties to our clients. There is not a single consumer out there that I believe should ever do anything without the professional there. I believe in the value proposition that I have to the market, mm-hmm. to the death. Yep. I know the advice that I give. I know the value that I bring. And every agent should feel this way, whether they're a mortgage agent or a real estate agent. If you don't feel your value, it's because you haven't educated yourself enough to have the confidence to say that.
Sure, absolutely. And, some markets like ours, there's a tendency sometimes to hoard information. The scarcity of that information, your access to it, is sometimes what is your perceived expertise. That's not really great expertise to me. That's just information. And I think some people think that if we, open the kimono and show consumers more information and historical prices and, multiple lender rates and all this kind of stuff, that it means we're not necessary. And we are. I agree with you on that. Like, we're a broker.
The more info, the more we're necessary.
Exactly. And the more value we can add to make to a good outcome, a proper decision. You know, we say we want to reduce the influence of the broker, but not eliminate it. The broker still, the customer still needs the advice.
You're referring to the bias of the broker.
Yeah, exactly.
The influence that we're trying to bring down is that one that is influenced by the wrong incentive,
Exactly.
which is selfish interest.
Yeah.
And not to say everyone or you're not selfish, I'm not selfish. Everybody is. The minute that you have a choice to benefit yourself more by still doing the job, the more likely you are to do that. And the consumer doesn't win by that.
Yeah.
To put this into real estate terms, if we show 2 homes, they're both amazing. One is offering 1% commission, the other one is 2.5%. As a human being, I would be lying if I wasn't hoping inside my heart that the consumer picks the one that pays more commission. I would be a liar.
Absolutely.
So if that is human nature and DNA, we can eliminate that temptation per se and service the client with absolutely no bias and still be rewarded with excellent service, compensation, and all the things. I think that's where you have a winning platform.
100%. If you try to sort of position yourself out in the marketplace as being customer first and you don't think that way, then I don't think you're customer first. You know, the customer outcome is what is the priority, and your compensation is a secondary consideration. At least it is at Frank. I know at a lot of other broker houses, that's not the case. There's a maximized commission ethos there. Understandable. That's the way the businesses are run. But we don't think that way. We really want to make sure that we deliver outcomes for customers. And if that happens, then we're going to have a successful business, and we're not going to worry about any individual commission here, there, or anywhere.
I absolutely love that, because there's more than enough business to make up for the loss of a few deals versus actually creating that huge value proposition with clear decision making.
Yeah.
I absolutely love it. Mr. Don Scott, this is it for us today. I think we brought a whole lot for people to unpack. I hope everybody enjoyed the show today. I will see you next time on Broker's Playbook. See you soon.